Hello, everyone, and welcome back to The Economy Lately. I'm Anthony Smith, Chief Economist here at FreightWaves, and this is episode 15, and I'm here with South Turk once again. This is nice here.
I know. It started off a little rough, but yeah.
This is like a breath of fresh air. I know that we're on to something nice here.
Yeah. Mm-hmm.
We're going to like this.
Definitely been in worse universes.
For sure. I'm excited to talk to some of the people to see what this economy and what this universe is going to be like.
You're right. We should look into that.
Get on the streets. But anyway, we got some stuff to jump into. Kicking it off with this week's releases, and as we mentioned last week, this week is going to be huge for the jobs market, and there was some interesting movements here. We're going to kick it off with job openings. The job openings report showed that there was an upward movement, a little blip up. Good news to 11.2 million job openings. This is great news on the surface because it shows that there's more opportunities for individuals to get a job. And so this is exactly what we want to see in the economy, especially as we continue to see that there's more layoffs happening from time to time. We want to see that there's an ease in being able to find another job. One of the areas that we really saw standouts for was in transportation warehouses. That has some of the largest gains in the last report. However, there are some underlying trends that we saw in this recent report. We saw that hiring fell by 1.5%. This is showing that a lot of companies, even though that there are more job openings, are starting to slow down on their hiring. This is a concerning trend to watch on the underlying level. The other thing that we saw was the quit rate actually eased down a bit. And you might ask yourself, why do we care about the quit rate? And that's because that is a sign of essentially consumer confidence. If a consumer is feeling good about their economic outlook, if they feel good about their job prospects, they go out and they get a new job. This has not been the case as much lately, but it's still very much elevated, well above the pre-pandemic level. But there is some easing there showing that some consumers may be holding back a little bit more now, showing that there's a little bit more of an easing in a sense in that consumer confidence. Although there's going to be some mixed reviews here because we did see that the consumer confidence index went up for this week. And that's mainly due to their easing in energy and gas prices as of last week with the CPI numbers and the energy updates numbers for the downward movement in gas prices. Although the cost of living is still very much elevated, we did see it come down, and that's going to take us into our next category, and that's going to be around consumer price index, or if you want to be a little bit more simple, consumer spending. But wait, before we jump into that, we have to talk about a new update for the ADP employment report or the payrolls report, because they revamped some things. They had a little bit of issues earlier on in the year with these huge sweeping revisions, but they came back and they have some new numbers for us. And they showed that in July that there were 132,000 jobs added. This is a downward movement from the over 260,000 added the month before. They are also showing that there is some hiring slowing down from the company level. So this is also another concerning trend. So really, when we look at the underlying trends, we are still starting to see some concerning things when it looks at how companies are hiring or if the speed of hiring is still very much on track. The other thing that the report showed was that inflation is still a thing, but not so much when it comes to increases in wages. When we look at the wage increases, we saw that increased by 7.6% as of the latest month. And if you know anything about the CPI, this is below that. So that's not the good news here. So as an overall summary here, the ADP report did show some confirming signs with the previous report around job openings that hiring is indeed slowing down, although there does seem to be ample opportunity for a lot of individuals to get back into the job market if they were to undergo some type of layoff or switch up at the corporate level. And now it's time for that part that I've been teasing the entire show, and that's consumer spending or personal consumption expenditures if you're fancy. And we got an update for that one last week, and the report was a little bit interesting. When we jumped into the report, we saw that there was an overall increase of 0.1% for consumer spending. The report also showed that there was a decline in cost of living. This is great news. This is the first time in over 2 years. However, all this is really tied into the downward movement in gas prices. We look at overall real consumer spending. This is still a positive thing, but we saw that real disposable income fell by 3.7% on a year-over-year basis, but did have a slight edge up by 0.3% on a month-to-month basis. Of course, these things were mentioned last week. The savings rate. The savings rate is still very much low at a level not seen in over a decade. And so this is still the case as of the latest report, and this is still concerning because we're still seeing that there's still inflationary pressures, even though the cost of living edged down from the downward movement in gas prices. It's still very much elevated when we look at things like the cost of living and housing, and when you look at grocery prices, these are still very much elevated. So that's going to be a concerning trend. And of course, we care about these consumer conditions because the consumer makes up over or just around or about 70% of economic activity within the US. And so that means that it doesn't just have a direct impact to freight demand and freight volumes from the consumer level, but really the overall economy as well. And we have to get into our honorable mentions for this week. And looking out the rest of this week and going into next week, we're going to have updates that haven't been released just yet at the time of this recording. But we have the ISM Manufacturing Index, like they like to be called these days. We have the official unemployment rate, which is going to come out on Friday. The non-farm payrolls number, which is going to be from the BLS. And of course, initial jobs claims, which just came out on Thursday. All of these numbers are going to have really implementing headline indications, but of course, be aware of what's happening underneath those trends. Dig a little bit deeper and you'll be able to get the full story. That's going to do it for this episode of Economy Lately, and we'll see you next time.
So nothing about any beds that are flat or nothing.
Oh, Fotri.
Ah,
You're right. So you have Fotri with construction.
All right. Well, I'll see you next time, man. Good shoot.
Yeah, man. Good show.
Yeah.
They were just here. I can sense it. Once and for all, the economy lately will come to an end. It's all going to be over.